Hello, everybody. Happy Monday. Welcome back to Chart Request Live right here on Stock Market TV. I am your host today, Sam Gatlin, joined as always, or seems like always. It's been me and Dan quite a bit here together on Chart Request Live. It's always a pleasure to do this with you, Dan. This is one of my favorite shows that we run here on Stock Market TV because, you know, I look at thousands of charts every week. I think yesterday alone I went through 1,500 charts at least, and there are still things that slip through the cracks. And our great community here at Stock Market TV always brings them to our attention. So I certainly have a special place in my heart for this show, Chart Request Live.
Yeah, I mean, it's always great to be here. We have fun doing it. And yeah, you make a good point. Like we rip through a lot of charts, but there's a different element I also find too. Just sitting here and like running charts and ticker requests and taking that step back and talking through it with everybody. It's good to do that. It's good practice to do that as well.
For sure, Dan. Yeah. So those of you that are not familiar, this is the show where you provide the tickers and we provide the charts. We start with our mailbag, which you can enter your ticker into for next week's episode if you email questions at stockmarketmedia.com. And then after that, we hop on over to the YouTube chat. So if you are watching this on Twitter, be sure to jump on over to YouTube so we can see the tickers that you are requesting. But first, Dan, let's set the stage with what's going on in the broader market. I see you brought along a chart of the NASDAQ 100 looking pretty gross.
Pretty
I
nasty
was looking
stuff,
at some
right?
factors over the weekend, doing some intermarket analysis, looking at things like high beta, low volatility, value versus growth, discretionary
Yeah.
staples. They all look pretty not bullish, in my opinion. If in today's daily beat, I wrote about Intel Corporation.
Yeah.
Pull up that chart, Dan. I think that illustrates
Intel.
perfectly what's going on in this market. Very similar setup to what we have here in the NASDAQ 100. So you had this
Yeah.
200% ripper earlier this year. Then you stalled out, carved out this distribution pattern, and it decisively resolved it on Friday on the heels of an incredible earnings report. I mean, Intel has like never in its history reported numbers like this, but the market is still punishing the stock. And I think that is exactly where we are today in the current market environment is these hot AI stocks just aren't good enough. You know, the market has already priced in all of this good news, and now you're seeing sellers take control, Dan. So I guess
Yeah.
the only question I have is like, how far does this go? Is Intel going to crash 50% from here, or does this just, go down another 10%, carve out a bottom, and then we work our way higher into the end of the year?
Yeah, I mean, all great commentary, all great points. But yeah, you had this massive ripper, in what maybe a few weeks it took to get to those returns, and now you have a little distribution pattern. You got a little give back. It's completing. I would like to see it hold this gap. You don't want to see it be filled. There's really no concern, and this would be considered normal price action, in my opinion, coming all the way down to about this level, even maybe undercutting it a bit. But if it doesn't fill that gap, that's bullish. That's still bullish in my opinion. And we may be getting ready after that happens for the next up leg. We have to see. Still lots of data to come in, but yeah, like tech is under pressure. It had a great run. JC even mentioned on the morning show the best 2 months ever. So this is not
For
a
technology, is that what you're talking about?
yeah, for
You
technology
know,
as a
JC
whole.
loves to throw that out there, but Rick and I have countered him with the last time we saw a move like that in technology relative to the broader market. We've actually used the SOX index, which is very very close to something like technology. Nonetheless,
Yep.
the last time you saw a move like that was at the peak of the dot-com bubble. So I certainly don't know the future. I am just posing the question, but like, what if that was exhaustion, Dan? What if that was the
It,
end for
it
now? I think it's a
absolutely
very
could.
real scenario.
Yeah, of course. We always have to keep an open mind and open to anything is possible. We've seen that over the years, just monitoring markets. But I would then like to see more evidence pointing towards breakdowns, other sectors, um, other leaders catching down, and all that, right? To support that would be the end. I'm not seeing it right now, but who knows? It could absolutely happen. To your point,
How about
we'll
something
see.
like discretionary, XLY?
Yeah, that's
You know, this
not
is one of the
obviously
most
not doing
important
great.
sectors out there, Dan.
Yep.
Not looking good. Tesla got blasted for its earnings report last week. They are joining the rest of the Mag 7 and spending like drunken sailors. We have Amazon coming out this week, another major component of the discretionary sector. And if the market sells that report, I mean, kiss this one goodbye, Dan.
Yeah, consumer discretionary has been a concern. It's been doing absolutely nothing, as you can see here. Like it is holding above the 2021 highs, which is constructive. You want to see that. But if it loses this level, yeah, then you're starting to talk about another point in the for the bears, right? So you don't want to lose this level. You want to see consumer discretionary eventually start to work its way higher. Um, Otherwise, yeah, that'll be a signal for more trouble and more problems ahead.
Absolutely. Big week for earnings. You know, it's in terms of market capitalization, this is the biggest week of the entire earnings season. You know, you got four of these magnificent seven stocks reporting and, you know, a countless number of other market bellwethers. So this is, you know, we often say we're going to learn a lot this week, but we are going to learn a lot this week in terms of what these companies report and how the market responds to that news. So, um, yeah, big week. All right, Dan, we've gone long enough talking about the current market environment. Let's talk about the tickers in the mailbag. So John brought along the RTX. Looking at this stock with a 12 to 25 month time frame.
All
And
right.
this is, you
So
know,
one,
formerly
two.
known as Raytheon, one of the largest prime aerospace and defense contractors out there. Just reported earnings last week, I believe. Let's see, this one rallied 7% in reaction to a double beat. And what really stood out to me last week was the Lockheed Martin, which had its best earnings reaction of the 21st century as it rallied 10.5% on the same day as RTX in reaction to a double beat. So aerospace and defense, certainly hot right now, Dan.
Yeah, and you saw quite a bit of positive price action last week in this space. And as you can see here, great uptrend. It retraced back to this 261.8 where it held, and now it's breaking to new highs. I think you could define risk for like a tactical entry right here at this pivot highs, call it 210. And because your time frame is a year to 2 years, yeah, that's a great entry, and you want to ride this as far as the uptrend will stay in place.
Totally.
That's
Yeah. For me, it's like, yeah, get in, define your risk right there and just like ride it until the trend bends and
Yep.
breaks, you know, sell a 90-day low or something like that. But
And I mean,
this
look
is
at
a
this
trend you want to
run
be long and strong.
from 23 up to this point, and it already kind of had its biggest drawdown within like the last, call it 3 years. And now it's breaking back out of that for the next up leg. It can do another one of these type of runs off this breakout. So no, great stock, one of the leaders in the space. Who brought John brought this? Good eye, John.
John brought this, yeah, and this is something we've been talking quite a bit about here at Stock Market Media. This whole Golden Dome thesis and how we're about to see the largest industrial build out in the aerospace and defense industry since World War II. I mean, basically, like it's been a really long time since the federal government has spent the amount of money it's about to spend on aerospace and defense, and you can see it clearly in the price action of the largest players in the space, and names like Raytheon here, or Lockheed Martin, or not quite Boeing or SpaceX, but certainly plenty of winners in the space. All right. Moving on to Hansen wanting to look at Muff G with a 3-month time frame. So I
Yeah.
believe this is the largest Japanese financial stock right here, the JP Morgan of Japan, if you will.
And
Dan's charts are lagging behind. So this is, as I mentioned before, the JP Morgan of Japan, $260 billion market capitalization.
I'm not sure what's happening here. Okay, here we go.
Someone tell Dan to get better Wi-Fi.
Charts are slow on a Monday here. Yeah, these banks have been absolute beasts, as you can see this. I mean, this is a monthly. And look at this. See if we got
Yep, she sure is a beaut, Dan.
And we just cleared the 61.8 of that entire retracement, coming in at 18. 3-month time frame. I mean, there's really kind of in no man's land. There's not much of an entry here where you can define your risk. Basically breaking a new 50, tagging new 52-week highs, obviously today and from Friday. And then maybe you can just ride this uptrend with these higher highs, higher lows. I mean, for me, I need something more clear and more defined. What about you, Sam?
Yeah, I'm with you. Not a huge fan of this for a 3-month trade, but if that were my time frame with a trade like this, I'd certainly be taking profits at that shelf of former highs that you highlighted there, right around $28. This is a massive, massive base, and I do expect this one to break out to new all-time highs and join all of the other financials across the world and making new all-time highs. But I mean, just look at where this one has come from. I have a hard time believing this is just going to rip to new highs. I think it's going to need some time to consolidate there. And maybe that's just through time. It just turns sideways there for several weeks, several months, several quarters, hell, maybe even several years. I don't know, but
yeah, absolutely.
Amazing chart nonetheless. We were talking about Japanese financials earlier today during the Beat Report Best Ideas pitch meeting. So Beat Report members know what's up in that space for sure. A lot to like about these Japanese financials. And speaking of the JP Morgan of Japan, let's look at the JP Morgan of the United States of America, JPM. Joe wants to see JPM, says he's owned it for about a month, would like to hold it for a year. How does it look? Thanks for your request.
Yeah, JP Morgan looks great, obviously, going out at new all-time highs last week. And so let's see if we fit this drawdown out. I mean, you're kind of in the middle of no man's land here. And the time frame was what again?
He wants to hold it for a year. He's been in it for a month, so sitting on a nice little gain.
I mean, if we fib out the COVID plunge, you got a level.
Oh, I like that.
You got a level
350 gets you to 520.
Yep.
Woo-wee.
Yep, exactly. And even when you look at relative, I mean, tech has obviously been getting crushed here a little bit, but that's
oh shit, Dan! I haven't seen this chart. Wow, bringing the heat today.
So, wow. So there you have it. Fishing in the right pond. This is what you want to see when it comes to the relative. So, no, I like it. I like it, Joe. It's you could use that 350 as that level.
Looks amazing. And this is, I think you can make a really strong argument, Dan, that this is the most important market bellwether out there. Like if you want to know the direction of the S&P 500, I think there are few stocks that will provide better information than JP Morgan Chase. Like if you overlay this looking back multiple decades with the S&P 500, it's almost a perfect positive correlation. So seeing this rip to new all-time highs makes it hard for me to bet on extreme downside for the S&P 500, despite all of the negatives we're seeing in the technology space, which are a major component of the S&P 500.
Yeah, no, that's right. I would agree with that.
All right, Dan. So that is all we have from today's mailbag. Thank you to John, Joe, and Hanson for bringing your tickers to our attention. Now let's shift over to the YouTube chat where we have some action. We've got the BTXBH 3060, great name, in the house. Trip Davidson, Jerry, what's up? Sir Eugene in the house. Jonathan's here, and then we've got the Osprey Knoll 23 wanting to look at ENVA. Says there's a nice flag breakout today, so I assume we're looking at this with a shorter time frame, probably a daily chart. Maybe buying some short.
Is it a shorter time frame?
Well, they mentioned the flag
Flag,
breakout
yeah.
today, so I think that's what they're looking at here. And this, wow, this has been a beast. So this is a $6 billion credit services stock, and you can see how this one has just ramped higher here over the past few weeks into this high and tight bullish continuation pattern. Let's see. Looks like they provide short-term consumer loans, credit accounts, installment loans, yada, yada, yada. Pretty standard credit services stock here. Talk to us, Dan.
This is credit services.
This is credit services. Doesn't exactly look like its peers.
Oh, I must have got twisted up. I thought this was in pharma, but maybe I'm thinking of another ticker that I came across. It popped up on my scan. I thought this was it, but maybe it is the same one. But yeah, this has been a beast. And I mean, if you're looking for like a target, what is it, Sam? You measure out the flagpole and just tack it on.
Yeah, love it.
So I mean,
That's a big flagpole right there.
big flagpole. The breakout gets you up to 380 if it goes on the same type of run. And yeah, I would use that, just anchor the VWAP right from that pivot high. You're already above there. So that would be your entry. Oh, but this is strong, yeah. Really strong.
This is a beast. This is a front runner for chart of the day. Also really like that JP Morgan and how it's breaking out versus the S&P. I had not seen that chart, so shout out to you, Dan, for bringing that along.
That one is really nice. Yeah.
That's a big deal right there. JP Morgan breaking out to new all-time highs versus the S&P.
And it just speaks to the same evidence we've been seeing with financials are one of the places to really be right now. So
for sure. Yeah, if you study history, these financial stocks win every single time there's a big industrial build out. So
that's right.
Shout out to the financials, looking fantastic. And let's move on to Jonathan wanting to look at ADPT. Our beat team was actually looking at this one earlier today. Pretty interested in this name, just not exactly wanting to take any action ahead of the company's earnings report, which is scheduled for Wednesday after the market closes. And for those of you that are not familiar, this is a $3.6 billion diagnostics and research stock. I believe it's a large component in the ARC Genomic Revolution ETF. And
this one's just a nice
hell of a chart
pattern. Yeah, very, very nice classic reversal pattern where it broke out of this 13-ish dollar level, came back, retested it with the VWAP from the all-time highs, and now it's making new 52-week highs recently. And let's see if we can get some fibs here. There's no time frame on this, just the ticker.
Yeah, just the ticker.
I mean, maybe you get some consolidation around 28 and a half. We still got a little ways to go there. But you can define risk a little more tactically right here. at these former highs, call it 18, 19. As long as we're above that, no reason to not want to be long. It's a good chart. Solid
It's a
reversal.
fantastic chart. Um, was just looking at the cap table for it. Looks like Viking Global Investors owns about 20% of the stock. So by far the largest shareholder, much more so than someone like BlackRock or Vanguard,
Oh, okay.
big ETF providers. So shout out to Viking. A lot of conviction in this name. Looking really, really great here. Adaptive Biotech. So great ticker. Thank you for bringing that one along, Jonathan. I like that a lot. We've got a request for Adobe in the chat. And yeah, we might as well have that conversation, Dan, because software
Yeah.
is perking up. You know, Adobe is probably the last software stock I would ever buy. This one really sucks. And I don't think that's going to change anytime soon. But nonetheless, you are seeing a bid for software. So
Yeah, you are. And I mean, I would like to see some follow through and some continuation in software. Like it's had days here and there, but it hasn't really strung together like a real run. And you could see even by the software.
just look at it relative to IGV. I mean, Adobe IGV looks like
Yeah.
death. Like this is not something I would ever
Yeah, and I mean
buy.
for Adobe, like nothing's changed with this name. I mean, yeah,
Yeah,
the relative trend is awful. Like maybe this is where you'd want to see a bottom. Back at the from the lows
has
of
a
20.
lot of work to do, man.
A
I think
lot of
this one
work.
has
It's
to turn
bounced here.
sideways for at least 16 months before you can make any significant progress.
Yeah, I mean, you undercut this level relative to IGV. You just don't even need to look at the chart anymore. But on an absolute basis too, I mean, this has to reclaim 275, 280, or else there's really no conversation to be had. It's in a downtrend. Nothing's changed there. So yeah, 275, 280. Get back above there, then it's back in the conversation of wanting to go long. Otherwise, it's definitely a no touch from me.
I'm with you, Dan. We've got, yeah, shout out to Jerry. Jerry is just the man. It was great getting to hang out with him in Miami earlier this year. And Jerry brought along the MAC, the mac and cheese. Let's pull that one up, Dan, because real estate is
Yeah.
looking really, really nice. XLRE, the real estate sector of the S&P 500, just closed at an all-time high last week. If you look at the total return chart, looking at the price returns, it closed at a new 52-week high. So real estate certainly catching some significant sector rotation right now. So this one right here is a $7.5 billion retail REIT, and yeah, that's about all the information I have out of Santa Monica, California.
Yeah, I mean, this one's doing really well. Really nice reversal pattern here. We're above this shelf around 22 that was resistance back in 21, back in the end of 24, and we're even above the anchored VWAP from the 2015 highs. One more still to clear from all-time highs going all the way back to the great financial crisis highs. But this is looking very good, very constructive. Real estate has been doing really well. No one's really talking about it either.
It's a
Um,
beautiful thing, isn't it, Dan?
I love it. I love that.
Fun fact,
No
the
one's
real
talking about it.
estate sector used to be a part of the financial sector.
That
So
is correct.
seeing
Right.
financials do extremely well, it makes sense to see real estate working as well.
Yeah, exactly. And this is just very constructive and very clean. So you have a shelf of about 22, 23, as long as we're above that. And then you also have the anchored view up coming around 24 and three quarters, 25, as long as we're above that. I see no reason to not be long. Maybe you get some resistance here at the all-time high one. That takes a little bit of time and consolidates and bounces around. But ultimately, this looks like it's heading in the right direction. So this is a great chart.
Absolutely. Shout out to you, Jerry, for bringing that along. We've got a request from Dan. another Dan in the house wanting to see Rolls Royce. So this one reports in 3 days, so I don't really want to cover it. It's also stuck
Yeah,
below that 2014 or late 2013 peak. So as long as price is below there, there's just not much to do with a chart like this. And it does look constructive over longer time frames, and I think it'll be a huge winner. But I want to see more. I want
sure.
to see a breakout above that level there. This is not the name I would reach for in the aerospace and defense industry. But what I do want to talk about, Dan, is General Motors. We've got a couple of requests for the GM. This one, I don't think I've ever covered this one on Chart Request Live. So
Yeah, and I mean, look, we already got fibs right here. Um, and that 161.8 is the level. It's coiling up here, looking like this week's candle has some decent potential. But $89 would be the level. We need to break out from this weekly coil and clear that 161.8. We get above there. I like it.
it's fascinating to see so much strength in this one while Tesla is just
Yeah,
really sucking it up.
yeah, that's true.
Big rotation in the auto industry. Let's finish today's show with Fake Beat AI's request for Dino. The dinosaur, the fossil fuels, one of the largest oil refiners out there. This is the HF Sinclair. And this is one that's near and dear to my heart right now. It's something I've been talking a lot about with my Super Cycle Report members, who I will be going live with here at the top of the hour. So um, if you are a member, I'll see you there. And if you're not a member of the Super Cycle Report, I don't know what you're doing. Your life has gone horribly wrong if you are missing out on this Super Cycle. There is currently a Christmas in July discount that we are running here at Stock Market Media. So you can get a significant discount to Super Cycle Report. I just dropped that link in the chat, so check it out if you want to join our community there and get access to Jason Purrs and my favorite energy trades. And these oil refiners certainly have been near the top of our list. We are not in the dyno, but we are in some smaller ones with higher upside potential and better relative strength. But nonetheless, Dan, dyno looking fantastic as crack spreads continue to make new all-time highs. These refiners are just printing cash right now.
Yeah, absolutely. And this is just a very clean base breakout here, above 82, 83, long all day. And this was one that was popping up on the scans and showing that relative strength even before anything really in the energy space started to go. I mean, you had this coil right here and shook out and then just took off. It was one of the real leaders before everything else joined, maybe a few days later. But yeah, that was the tell. And like, as long as this one holds 83, yeah, I like it. This is a nice big base breakout.
Dan, will you pull up
Crack?
crack? We'll pull up crack versus XLE. This should be the final chart of the day because I think these refiners are going to outperform the energy sector for the foreseeable future, as this ratio is now at the highest level since early 2022, resolving this massive bearish to bullish reversal pattern. Kind of an inverted head and shoulder-ish. If you draw like the diagonal trend line, I'm not like Mr. Diagonal Trend Line guy, but
Yeah,
you can see it.
I know exactly what you mean. Yep. This one more or less right here. And you could see the little inverse that you're talking about right here. And yeah, this is a clean reversal pattern. Path of least resistance is now higher. And I would agree. These are the names that you would want to be in for the energy sector.
Absolutely. I'm super into it. And I'm looking forward to the Super Cycle members call here in a few minutes. I'm going to talk a lot more about this. Jerry says the Super Cycle membership is worth 10x the membership. Thank you, Jerry. That is very kind. Again, there's a link in the chat if you want to lock in our special discount before that goes away. But with that said, Dan, let's wrap this show up. We've got charts to make, trades to put on. I want to thank everybody for showing up here. Jerry, Fake Beat AI, everybody, thank you so much for showing up. If we did not get to your ticker in the YouTube chat, do send us an email to questions@stockmarketmedia.com, and we'll be sure to cover it at the top of next week's show. I will be in Florida at the Mad Beach, soaking up the sunshine next Monday, so I will probably not be here for that, but I'm sure you'll be in good hands here on Stock Market TV's Chart Request Live next Monday at 1 p.m. Eastern Time. Until then, everybody, stay safe out there and do stay cool. Also, it's 108 degrees here in Kansas today. I'm not sure if you're experiencing the same heat, but boy, am I drinking a lot of water these days. It's crazy hot. Everybody, thank you. Catch you later.
Thanks, everyone. Until next time.